The first quarter of 2024 continued along the path left by the fourth quarter in 2023. That was a position of strength, where economic data in the United States and around the world improved on a month-over-month or year-over-year basis. We saw inflation fall and economic output increase. This has led to strength in the equity markets that, again, has extended the rally that we saw in the last 2 months of 2023 into what has been a better than expected first quarter 2024. We would describe equity market performance in the first quarter of 2024 as having been strong, perhaps exceptionally strong may be a better characteristic for it. But it has also been justified by improvements in the economic data, as well as more specifically, the earnings data for companies not only in the United States, but around the world. What we've seen is a re-acceleration of earnings growth, or stronger growth in profits for companies from the more lackluster results that we saw last year. This has driven markets ahead in the first quarter, and we think will continue to drive markets forward in 2024. From the fixed income perspective, we do expect the Bank of Canada as well as the Federal Reserve in the United States to cut interest rates. Nonetheless, we expect bond returns to continue along their path of mid-single digits for investors, and that's largely what we've seen proportionally in the first quarter of 2024, and we think can continue through the remainder of this year. As we look forward through the remainder of 2024, we are reminded of what we outlined in our outlook for the year, and that is that we've seen the concept of rolling recessions. That was the story in 2023. That has given way to what we believe is a renewed economic recovery in the United States and other areas around the world. The concern that we're hearing about is that the markets have been perhaps too strong in the first quarter and that we're due for a pullback. Our research would actually suggest that that is not the case. The S&P 500 is no more prone to a correction in the coming 6 months than at any other time going back to 1927. In fact, what the data shows is that we could see further strength in this market. So investors that are worried that they have perhaps missed it have not exhausted the opportunity as yet, at least to what the research would say. So when we look ahead, we're actually encouraged by the momentum in the markets. We're encouraged by the inflection points in the economic data to the upside, and that leaves us with a still optimistic view for investors through the remainder of 2024.